I welcome you to today's earnings call for the third quarter of fiscal 18. Before we proceed with the call, let me remind you on the safe harbor. The discussion today may contain forward-looking statements that involve known and unknown risks, uncertainties, and other factors. I would like to take this opportunity to remind everyone about the safe harbor. Therefore, please refer to our conference call invite for the same. A replay of today's discussion will be available for the next few days post the conclusion of this conference call. So in case you need to have a look at it, it is available. On the call today, we have Dr. Kiran Mazumdar-Shaw, our Chairperson and Managing Director, along with the senior management team to discuss this quarter's performance and the future business outlook. At the conclusion of this call, if there are any further clarifications or information needed from us, please do get in touch with me. Now I'd like to hand the call over to Dr. Kiran Mazumdar-Shaw. Over to you, ma'am.
Thank you, Saurabh. Good morning, everyone. I welcome you to Biocon's earnings call for the third quarter of fiscal 18. Let me start with key business highlights for this quarter. I'm very proud to say that the US FDA accorded approval for Ogivri, our partnered biosimilar trastuzumab with Mylan. We thus became the first company from India to get its biosimilar approved by the US FDA. Biocon also received approval from the Brazilian regulatory agency Anvisa for biosimilar trastuzumab through its partner Lips Pharmaceutica. It is the first biosimilar trastuzumab to be approved in Brazil. Anvisa also approved Biocon's recombinant human insulin drug product under the new non-originator biologicals pathway, which will help us compete in the country's Ministry of Health tender market, in addition to the retail market where our partner has significant presence. Biocon launched bevacizumab, the biosimilar product under its brand name Krabeva in India for the treatment of patients with metastatic colorectal cancer and other types of lung, kidney, cervical, ovarian, and brain cancers. Last week, we announced our global collaboration with Sandoz, a Novartis division and a global leader in biosimilars, for developing a set of next-generation biosimilar products. The collaboration aims to help patients worldwide gain access to a range of high-quality, affordable immunology and oncology biologics which complement our existing portfolio. It will certainly bolster Biocon's existing global biosimilars portfolio comprising biosimilar antibodies and insulin analogs, which we are developing in our global partnership with Mylan. We are targeting opportunities that are expected to open up in the next decade, thereby addressing some of the biosimilar opportunities beyond the near-term opportunities being addressed with our very successful global partnership with Mylan. Syngene expanded its ongoing collaboration with Bristol-Myers Squibb through 2026 that will see the addition of a new facility to support Bristol-Myers Squibb's future R&D operations and allow for expansion of the team of scientists working exclusively for them in Syngene. Syngene operates the largest research and development facility for Bristol-Myers Squibb outside the United States. It is certainly playing a very integral role within the global research and development network of Bristol-Myers Squibb. I would now like to move on to financial highlights. Our consolidated revenues this quarter were 1,092 crores. Revenues from operations were 1,058 crores, which grew 1% as compared to last fiscal. This includes licensing income of 12 crores this fiscal, but this compares to the 79 crores of licensing income that we received in Q3 last year. From a segmental perspective, the small molecule segment revenue was 369 crores, down 9% from Q3 of last year. The biologics segment revenue was 190 crores, down 15% over last year. However, when adjusted for licensing income, product sales grew 16% as compared to last year, with growth seen in both insulins as well as biosimilar antibody sales. Branded formulations showed strong growth of 27% at 156 crores against 123 crores last year. The research services segment represented by Syngene was up 17% at 387 crores compared to Q3 last fiscal. We incurred gross spends of 94 crores on R&D this quarter, and of this amount, 53 crores is reported in the P&L, corresponding to 8% of revenues excluding Syngene. We capitalized an amount of 41 crores related to our biosimilars and insulin analog development expenses. We booked a forex gain of 7 crores this quarter. Group EBITDA was at 256 crores with EBITDA margins of 23%. Core margins, that is EBITDA margins net of licensing impact of forex and R&D, stood at 27%. The reduction in margins percentage as compared to last year is on account of lowering licensing income compounded by fixed and operating costs related to Malaysia. Our reported net profit for the quarter was 92 crores, which represents a net profit margin of 8%. Now coming to individual business segments, small molecules continue to face headwinds as a result of continued pricing pressure and channel consolidation in the US, impacting the statins business. This is also further led by a decline in rosuvastatin API pricing. Continued demand for immunosuppressants helped to offset some of this pressure. We anticipate this trend to continue in the near future. When it comes to biologics, the financial performance of this segment was impacted on account of plant requalification activities undertaken at our fill finish plant, which led to production disruptions. We also booked significantly lower licensing income, resulting in lower revenues as compared to last year. Segment margins were impacted due to lower licensing income coupled with fixed and operating expenses related to the Malaysia insulin facility, like I had mentioned earlier. Given that the drug product plant is now back online and producing commercially, we expect biologics production to normalize in Q4, thereby furthering sales growth. The biologics segment is expected to bounce back in a robust manner in FY19 on the back of expected regulatory approvals and product sales in emerging markets. Branded formulations, the growth of this segment was led by the UAE business, driven by new and in-licensed products with momentum in branded generics. The oncology and comprehensive care franchises in India also led growth in the domestic market. Syngene grew 17%, driven primarily by the chemical development vertical, reflecting good underlying performance. Biologics and biological discovery has also seen good traction. We expect Syngene to close FY18 with strong momentum, this time primarily driven by biologics. When it comes to product development and regulatory updates, Biocon and Mylan have submitted their response to the US FDA on the complete response letter issued by the Agency for Biosimilar Pegfilgrastim. The European Medicines Agency, or EMA, has accepted our resubmission of marketing authorization applications for both trastuzumab and pegfilgrastim. As regards our insulin glargine, our market authorization applications are under advanced stages of review in the EU, Australia and Canada. The application for this drug is also under review with the US FDA. I would also like to mention here that our insulin aspart global phase 1 clinical trial for this molecule has recently been initiated. Bevacizumab, the global phase 3 trial for this molecule, is progressing well in various sites in the EU and India as first-line treatment of patients with stage 4 non-squamous, non-small cell lung cancer. In terms of the novel biologics pipeline, we received DCGI approval to conduct a phase 2, phase 3 study in type 2 diabetes patients for our oral insulin candidate, insulin tregopil, in India. Dosing has commenced and we expect this trial to be completed in about 2 years. Before I conclude, I would like to summarize as follows. The financial performance this quarter was muted. Pricing pressure and channel consolidation in the US have impacted our small molecules API business. Reduction of licensing income and supply constraints due to plant requalification activities have affected the performance of the biologics segment. While challenges remain in branded formulations India business, the branded formulation segment as a whole has shown good growth this quarter, driven by the UAE business. Syngene performance is beginning to not only normalize but gain traction. The regulatory advancement in our biologics business made during the period augurs well for our future. We are hopeful of a recovery in our consolidated performance in the coming quarters, led by the biologics business and our research services business. I would now like to open it up for question and answers. Thank you.
Thank you very much. We will now begin with a question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset mode while asking your question. Anyone who wishes to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who would like to ask a question, you may press star and 1. The first question is from the line of Prakash from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Good morning to all. First question, trying to understand the gross margin movement, especially Q and Q. YOY, I understand the biologic sales have been lower, but Q and Q also it has marginally dipped. And if I see the segmental performance, I think the small molecules have done better Q and Q. So if you could highlight what has really led to the decline Q and Q on the gross margins, please.
So the quarter-on-quarter move is a very nominal 60 basis point. Obviously, at a base of, at a gross margin of 55-56%, we'll have those minor fluctuations. So I would not say that there has been anything one-off or anything not in the normal that has impacted the margins. Obviously, it's also dependent on the product mix within the various segments, and also which segment gives how much growth.
Yeah, so because the question is asked because the sales mix actually improved. If you see research services, Q and Q has improved. Your branded formulation marginally dipping, but biologics have Q and Q improved. So is it largely due to the licensing income, or that also has improved? So I'm just trying to figure out what has really happened.
Yeah, so when you see the segment results, it is after R&D expenses. So, while the gross margin would have remained same, because at the consolidated level, as I mentioned, the gross margin has not significantly changed. But the segment result is after considering all the other expenses and R&D costs.
Perfect, thanks. And secondly, on the update on the PEG, since we have, submitted our data, what would be the next steps going forward, and when are we expecting the approvals?
So, hi, Prakash. In terms of the PEG filgrastim, as Kiran mentioned in her opening remarks, Mylan has submitted the response to the complete response letter that we had received. Obviously, now the FDA would review that response and give approval in due course. We can't at this moment give a definitive timeline, but suffice to say that we expect a decision from the regulator hopefully in the first half of 2018.
Lovely. And lastly, I think we saw Kiran ma'am on TV talking about the potential listing of the biosimilar assets. So if we could know which markets probably we're looking at, and what is the time frame here, that would be very helpful.
I think I made comments very clearly that we will obviously be looking at opportunities to unlock value from our biologics assets in the foreseeable future. And I think it's too early for us to give you any timeline in terms of when this listing would happen. But suffice to say that at some stage in the near future, we will be looking at these kind of opportunities to unlock value.
I just want to, Prakash, just go back to the answer that I gave regarding the timing. I don't mean a calendar 18, I mean FY19.
Perfect. Great. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 if you wish to ask a question at this time. The next question is from the line of Ritika Jalan from Narnolia Securities. Please go ahead.
Hello.
Ritika, can you please speak on the handset mode and ask your question?
Good morning. Hello.
Yes, you may go ahead.
Yeah. I just have some housekeeping question. Like, what is the capex guidance for the next year? Like capex for FY18 and FY19?
Well, FY18 is almost over, but what we have said directionally is that on an annualized basis, we have roughly 100 crores of maintenance capex. Yeah. And in addition to that, we've already started construction of our antibody plant, where we are going to invest somewhere between $150 million to $175 million, including the qualification expenses. And this facility would be commissioned over a period of 2 years. So you can expect a large part of capex payout in the next 2 years towards this.
Okay. And do you expect the margin to grow further from this level, or do you expect them to maintain the margin?
We cannot give any guidance on margins. What we have said in the past is that when we have our biosimilar products in the developed markets, intuitively the margins should go up. But beyond that, we cannot give any specific guidance on the margins.
And what is the reason for decline in the license income? Can you brief?
The licensing income is lumpy. It all depends on what deal is done during the quarter. Sometimes you also have milestone payouts depending on the approval of our products. So, there is no trend that can be really looked at here.
Do we have further scope of more licensing income, or in other emerging countries or something like that?
The licensing income generally this year has been low. So if you look at 9 months licensing income, we have is 21 crores compared to 129 crores for the 9 months of last fiscal.
Okay.
Now the licensing income is derived mostly when you out-license these drugs in emerging markets. Yeah. And since most of our existing biosimilar drugs, we have already struck partnership in large emerging markets. Now the licensing income would start going up only when we have newer molecules that we start licensing.
Little bit outlook on that when it will be start, like when your deal will be finalized and all.
No, it's in various stages, so it's not. We cannot give an outlook exactly in terms of the timing and the amount. All that we're saying is, as you heard, that we recently got approval for our biosimilar bevacizumab in India. So that's a good licensing asset for us, and we would start discussions with our existing and new partners in emerging markets, which should result in increase in licensing income over the next few fiscals.
Okay. And on the Malaysian facility, couple of questions are there, what is the expense related to particularly to the Malaysian facility?
So we have said in the past that the fixed expenses for this facility is going to be around 48 million or 12 million a quarter. And this quarter we had $12 million of expenses, including interest and depreciation in the P&L.
Okay. And it will be continue going ahead or somewhat?
Yeah, these are fixed expenses, so they will continue. The depreciation, the interest, the employee cost, the utility cost.
Okay.
By very nature, these are fixed, so they are not going to fluctuate or go down.
Okay, sir. Okay, thank you. That's it from my side. Have a nice day.
Thank you.
Thank you. We would request participants to limit your question to two at a time. The next question is from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Hi, morning. Thanks for taking my question. I'm on, on the commercialization of biosimilars in regulated markets. What's your own take on the differences that we've seen on the very early days in the way pickup has been in US versus Europe? We've seen still challenges even Pfizer is facing with Inflectra. How do you see this commercialization bit in the US market really developing going forward?
As you know, this is, Mylan is front-ending the commercialization in both Europe and in the US markets. And I think this question is better addressed to them because it is not appropriate for us to comment. But having said that, I believe that, as you very rightly said, these are early days. And as you know, that the uptake of biosimilars in Europe has been very strong. And we expect that, in many segments in the US, especially in the area of oncology drugs, I think there will be a positive response to biosimilars, is what our take is. But I think we will have to watch the market, and I think Mylan is in a better position to answer this question.
Sure. Thanks. And secondly, a related question is, in this business, while it's a very, very limited competition, opportunities would be there across products. How important is being first to market in these products in your assessment?
I think it's important to have an early mover advantage, and I think having a partner like Mylan who understands the market very well, I think it definitely is advantageous.
Okay. And secondly, in terms of the emerging market rollout for our pegfilgrastim and glargine, how do you see FY19 versus, in terms of progression on that front?
Well, I think the real opportunity for pegfilgrastim is obviously the highly regulated markets of Europe and US. I think when it comes to glargine, we are represented fairly well in many, many emerging markets. So really the next big opportunity for Biocon and Mylan is the European and US markets. And I think the European review is fairly advanced. So we hopefully will get into the market in this calendar year in Europe.
And sorry, trastuzumab also for the emerging markets?
Well, trastuzumab for the emerging markets, as you know, we've received approval from Anvisa, and we are obviously, positioning ourselves to look at many other such big emerging market opportunities. So I think we will look at emerging markets very seriously in terms of the near term.
But do you think this whole, for us, the emerging markets across trastuzumab and glargine, will it be FY19 be a sort of a inflection year, or it's more like a 20 where probably, we'll probably see critical contribution coming from?
Obviously, FY19 is going to focus a lot on emerging market opportunities for these biosimilars. But I believe that, obviously the big opportunity is once the US and European markets open up will be the big opportunity, and that takes a bit of a ramp up. So FY19 certainly is definitely an emerging markets play in the near term.
Okay, thanks and best of luck.
Nitin, I would just like to add one more thing, which was there in our press release, but not in the highlights of this call, that we also received approval for our insulin glargine in Russia, which is for glargine is amongst the top 3 emerging markets. So that again, in addition to Brazil and some of the other emerging markets, recently this quarter we received approval in Russia. So that will also reflect in our growth in FY19.
And how big would the glargine market be for Russia?
Shreyas, do you have the number readily available?
Yeah, so glargine is a sizable opportunity in Russia as well, and I think if you see the way it has been going at this point, I think those numbers are in the region of about I would say although glargine has been moving towards Tuzo from Lantus, But I think those numbers have been pretty strong to look at in FY17.
Would you have any specific numbers just to help us model it a bit?
Yeah, let me just come back to you on that number
Sure.
in a bit.
Okay. Sure. Thank you.
Thank you. The next question is from the line of Chirulata Gaidhani from Dalal and Broacha. Please go ahead.
Hi, my question pertains to the profitability of small molecules. There is a lot of volatility in the numbers, in the margins. Can you throw some light on that?
Well, as I'd mentioned in one of my earlier comments, that these expenses are net of R&D expenses and other expenses. So it's sales minus gross margin. Sales minus cost of manufacturing and other expenses. Now, some of these other expenses tend to be lumpy. Again, the R&D expenses, we had high R&D expenses for our ANDAs in the quarter 2, which would have resulted in a reduction in the margin compared to what we have in this quarter. So you should really look at it on a 9 months basis to see what would be the normalized margins. If you look at 3 quarters total for small molecule is roughly 200 crores, which means the average margin, average profit per quarter is roughly 65 crores.
Okay. My second question pertains to growth in branded formulations. What has led to this growth and how sustainable is it?
So it was there in Kiran's. It was there in Kiran's remark that our growth was driven largely in our UAE business, and also in terms of the guidance that we said that there will be challenge which remains for our branded formulation India business. However, our UAE business, we have seen a good growth there, and we will continue to see good growth in the coming quarters.
Okay. And have we commenced insulin supplies from Malaysia to EU?
Not yet. We have not yet got the EU approval. So only after we receive EU approval, and once we are ready to launch in EU, the supplies would commence.
Okay, fine. Thank you. All the best.
Thank you. The next question is from the line of Vipul Shah from Sumangal Investments. Please go ahead. Vipul Shah from Sumangal Investments, your line has been unmuted. Please go ahead with your question. Due to no response, we'll move to our next question, which is from the line of Cyndrella Carvalho from Dolat Capital. Please go ahead.
Yeah, hi. Thanks for taking our question. So, ma'am, congratulations.
I'm sorry to interrupt you, Cyndrella. Can you please speak on the handset mode?
Yeah, hi. Thanks for taking our question, and ma'am, congratulations on the first biosimilar approval of trastuzumab. So, all set in terms of going ahead with the biosimilars. So, ma'am, just wanted to understand insulin glargine update for the EU region. Where are we right now, and what is our tentative expectation on that approval?
So, as I mentioned in my opening remarks, we are in a very advanced stage of review with the EMA, and we expect to receive, positive news from them very soon. And once that happens, that is for marketing authorization. We then expect to receive marketing authorization shortly thereafter. So, as I mentioned in my opening remarks, we hope that we will enter the European market with insulin glargine in this calendar year.
Okay. So, ma'am, just understanding, we have received the RH insulin, human insulin approval also. We have received approval in Russia. So, all these supplies would start from the Malaysian plant. Is that correct?
Yes, between both Malaysia and the Indian operations, we will basically balance the supplies across the markets.
So, any color that you can provide in terms of utilization from the Malaysian side for the with if like whenever we get insulin glargine, how should we look at it over 2 to 3 years from here onwards?
Well, we can't give you exact color on that kind of opportunity until we basically start seeing ramped up sales. But suffice to say that obviously it is in our interest to see how we can quickly fill up capacity in Malaysia, and that is what our objective is. But having said that, I think we are also very pleased that we got the off-take agreement signed with the Malaysian Ministry of Health, which obviously has also taken up a pretty important capacity of the Malaysia facility. So with added opportunities kicking in from EU and other emerging markets, we hope that the Malaysia operation will be optimally utilized.
And ma'am, on the Trans2Zu, we expect the entire emerging markets and the other developed market approvals to come by. We've already have Envisa with us already, and more approvals to come. So, how do we see FY19 from not from the developed market, but from the other markets point of view?
We actually will map out all the opportunities and make sure that we actually address the really lucrative opportunities in the emerging markets, because obviously we do need to make sure that we are prepared to cater to the developed market opportunities as they emerge. So I think we will map that very, very carefully and make sure that we have a sizable presence in the emerging market opportunities, but equally I think we will map it out to ensure that we are in readiness for the developed markets as well.
So just like earlier guidance of around 200 million from the biosimilar kind of, so we are closer to that, or it will be going a little next year. What is the sense?
Well, I think, biologics certainly has had a setback because of some of these inspections. We could have been right on target if we hadn't had those setbacks by the EMA re-inspection. But having said that, I think once we, cross that hurdle, I think we are very confident that although we might lose a few quarters, we will actually be able to hit that target definitely next fiscal.
Okay, that's good enough. And I'm taking the discussion to the small molecules part, ma'am. Any thoughts, any outlook over there? We have our first rosuvastatin also in the U.S. market now, and some other markets also we are getting in. So, like, how should we look at these entire small molecule business? Because U.S. market still remains, in terms of pricing scenario, still remains not that so good. So, what is the outlook? And if you can help us with a little more of color in terms of earnings in the small molecule segment.
So I think in the near term, or in the next fiscal, I think the contribution from generic finished formulations will begin to appear, but the real opportunities will only kick in thereafter. I think from 2020, 2021, I think you can start seeing our specialty generics that we are developing to start contributing. But at this point in time, I don't want to be too hasty in saying that these are going to be big ticket opportunities next fiscal. I think next fiscal you will start seeing our generic molecules contributing to the small molecule segment. APIs will continue to be the sort of bread and butter of small molecules next fiscal. But thereafter, we hope that the vertically integrated approach and the forward integration approach that we have pursued through the ANDAs and generic formulations will obviously then help us to bolster both growth and volume and in terms of revenues.
If I may ask this last one, what is the update on the EMA re-inspection? Any schedule that we have in mind, or we still await any update?
I think we do expect a re-inspection, shortly.
Okay. Thank you so much, ma'am, and all the very best. And I'll join back the queue. I have more questions.
Thank you.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Hi, thanks. Good morning, everyone. Any thoughts on when should you expect US FDA to inspect the Malaysian facility?
Arun, at this moment, we do not want to, comment on timing of any inspections. Suffice to say, we've got our application for Glargine in the US, and that would certainly trigger an inspection.
Oh.
But I don't want to give any, make any comment on the specific timing of the inspection. But clearly the inspection would happen in due course. And as you know, the timing for approval is still some time away because it goes through the, sort of the patent 30-month issue. So I don't think the US inspection is on a critical path.
Okay, that's very helpful. Thanks. And any thoughts on the timing of commercialization of Neulasta in the US?
I think that is a decision that Mylan would take based on one is the approval timings as well as other situations around IP. And previously Mylan has guided that they don't expect a launch in until either late end of 2018 or early 2019.
Okay. Okay. And just a question on Copaxone. Your earlier line was that by the end of this fiscal, you'll be resubmitting. Are you on track on that?
We are more or less on track on that. I think we are confident of submitting it definitely in Q1 next fiscal, but we are still targeting to see if we can do it end of this fiscal.
Okay, and does that then tie up with Kiran's earlier remark about ramp up in the US specialty, sales in fiscal 20? Is that
Glatirimar is just one such opportunity. As you know, we are working on a pipeline of ANDAs where we are trying to create a portfolio, and this portfolio is being done in a measured way. So every year we are just filing a few ANDAs. So as they cumulatively add up to a sizable portfolio in the next few years, and as the patent expiries happen, because many of the ANDAs we are filing now, the patent expiries happen only sometimes 2 years later or 3 years later. So that is why from a commercial standpoint, it may start moving the needle only at that point in time.
Okay. And any update on adalimumab BLA filing?
No, we don't have any comment on that at this point.
But it's in late phase 3, if I'm not wrong.
That's right.
Okay. Just one last from my side. This is for the emerging markets. What's the competitive landscape over there? It's a very general question, and but if you have to be a little specific, say Glargine Russia or Trastuzumab Brazil, are there several local players, who may not qualify for US or Europe, and therefore we don't see them, but they are there in these emerging markets, or do you think it's a pretty low competition, 2 or 3 player market, as is the DMs?
So I'll just give a brief comment and then maybe have Shrihas pitch in. By and large, the competition that we've seen in the insulin space globally still emanates from the innovators, that is your Lilly, Sanofi, and Novo. And as you know, when it comes to some of these molecules, some of these innovators are also developing biosimilars. So by and large, we've seen competition predominantly come from the innovators themselves.
Oh.
Some markets do have local players, but the dominant competition still happens to be the innovators.
So this is Shreyas. Thanks, Arun. Just to add a little bit on that particular aspect, I think there was a previous question even on Glargine in Russia. I think Arun is absolutely right. The major competition does come from the innovator companies in these markets. Russia specifically, we've seen that we are the first, in that sense, the biosimilar to be approved, and the innovator has the strategies have been to move Volantis to Toujeo. So the real impact that we would be having to make with our partner in Russia would be to actually see how we can create the disruption by actually bringing in the first biosimilar Glargine in that space, and to kind of win the market back towards Glargine. I think these are the challenges we would see although the market in itself has been pretty large, almost 80 million in the previous year.
Okay, thanks, Shreya. And Brazil Trastro, is yours the first approval there, or are there any more players?
No, but Brazil Trastro, I think ours is the first approval.
Oh, super. Good luck, and that's all from my side. Thanks.
Thank you. The next question is from the line of Harit Ahmed from Spark Capital. Please go ahead.
Hi, good morning, everyone. On the R&D spending this year, it appears that we are more or less flat versus last year. And so is there, how should we look at this number in terms of, in absolute numbers, from the current 400 odd crores gross spending? How will this number move over the next 2 to 3 years?
The R&D spend should go up. Even for this year, we had guided that it should be around 450 to 500 crores. And as some of our novel molecules progress in clinic, we would see an increase in the R&D. We also announced the collaboration with Sandoz, and I think the broad contours of the deal was discussed in the investor call, wherein we had said that the expenses would be shared 50-50. And even though these are in very early stages of development, but since you have asked about next 2 to 3 years, as these molecules progress, and we obviously will have expenses increase, the R&D expenses increase, which reflecting our share of Sandoz collaboration assets.
Okay. And given our potential to be the first biosimilar launch in the US for both trastuzumab and pegfilgrastim, how do you look at our capacity situation, given the exclusivity that we may enjoy for both these products? Will capacities be a constraint for us to capture significant share in these markets for these two products, and in the context of some of the competitors having disclosed the kind of investments that they've made in capacities which are significantly higher scale. So and our own capacity, newer facility in Bangalore, will take at least 2 to 3 years. Based on the capacities that are available now, how much share can we capture, or will capacities be a constraint when it comes to capturing market share especially during the exclusivity phase?
So this is Arun here. I'll just add color to it. Number one, of course, my standard disclaimer would be that we would not be able to share competitive information linking capacity to market share and grabbing the opportunity. Having said that, clearly our assumption is that we would plan our capacities in such a way that we would cater to the market as the market share ramps up. And I think we mentioned earlier that we've already triggered other capacity expansions in our antibodies facilities, and all of them would come into play as we launch and ramp up market shares in the depth.
Okay. Thanks.
Thank you. The next question is from the line of Shraddha D'Souza from Wealth Managers. Please go ahead.
Good morning, and thank you for giving me an opportunity. Now, just a question on the timelines. Would it be a fair assumption to make that we expect Trastuzumab and Peg approval from the EU sometime around the late first half of the next fiscal or early H2 in the next fiscal?
If you look at European approval for trastuzumab and pegfilgrastim, I would say my expectation would be that it would be sometime in the later part of this calendar year, or towards the second half of or middle to second half of next fiscal.
Okay. And how about the US approval for Glargine and pegfilgrastim?
Similarly, I think in one comment to an earlier question, I mentioned that Mylan had previously talked about the potential to launch pegfilgrastim in the US, say in early 2019. So clearly, the expectation is that the approval should be in place before that.
Okay.
Glargine is still some time away.
Okay. Okay. Okay, thank you so much. Secondly, based on the 9-month numbers that we have got, how confident are we of achieving the next year target, especially in the branded formulations and biologics? Because if we see the numbers, then we will almost need to double the branded formulation sales and see a very high growth in biologics. And with the background of biologic sales mostly coming from the emerging markets, and also the setback that we had to see during the year due to the remediation process. So how confident are we achieving the target for the FY19, and what would be the drivers for achieving that?
Yeah, so I'll just make a comment and then also have Kiran comment on that. So the quick comment I would have is that it's certainly our endeavor to meet the long-term guidance that we issued in 2013. Well, of course, some of the things you mentioned around branded formulations would be risks to this guidance. But clearly, if you look at our growth drivers or the growth sectors, which would be our biologics segment and the research services segment represented by Syngene, we would definitely expect to either meet or even exceed the segmental guidance that we had provided for these two segments for next year. But
that's the branded, that's the biologics and the research services.
Yeah, but certainly there are headwinds in the small molecule and branded formulations businesses. Small molecules, we alluded to the rapidly changing competitive landscape in the US, which impacts our API customers, resulting in sort of a cascading pricing pressure on us. And clearly from API segment as well as the branded for small molecule segment and branded formulations India, when we provided the guidance, of course, that was in dollar terms, and the rupee has, of course, moved since then. And these two segments, which have a significant rupee-denominated revenue component to it, do not benefit from that rupee growth. So I do accept that in our growth segments like biologics and research services, we are confident that to either meet or even exceed the guidance. In small molecules and branded formulations, we will do our best.
Okay.
Thank you. We'll move to the next question, which is from the line of Vipul Shah from Sumangal Investments. Please go ahead.
Hi, sir. Can you give any color on the current capacity utilization of our Malaysia plant, and what should be our cash break-even for in terms of capacity utilization for Malaysia? Hello?
Yep. So.
Hello?
Hello? Can you hear us?
Yeah.
Yeah, so we cannot talk specifically in terms of what would be the break-even capacity utilization. But needless to say, at this stage, we have not achieved the optimal capacity utilization. And since this facility is going to be used for our glargine sales for US and Europe, a large part of the capacity has been reserved for myelin, as and when they get the approvals in these markets. So right now, what sales we are doing is from emerging markets, and it's not going to be a significant utilization of the total available capacity.
Until myelin gets those approvals, right?
That's right.
And sir, I missed your phone call on Sandoz deal. So can you give me brief contours of that deal?
So it's a collaboration to develop the next generation, biosimilar pipeline. It's for a number of molecules. The number has not been mentioned in our disclosure, and what we have said is that both the parties would be responsible for developing the molecules on an end-to-end basis, which would mean the entire development, commercial, the clinical, the regulatory would be managed for the specific molecules by the respective partner. However, the commercialization in Europe and US would be front-ended by Sandoz, while for all other developed markets as well as ROW would be fronted by Biocon. In terms of commercials, it's cost and profit share in the ratio of 50-50.
Okay. Thank you, sir, and all the best for the future.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Hi, good morning. My couple of questions on small molecule segment. One, when we have seen a revenue decline of almost about high single digit in this quarter year-on-year basis, how the volumes would have done in that revenue decline?
Yeah, Anubhav, volumes either would be at the same levels as last year or would have gone up. The major reason for the drop is the pricing challenges. I think one of the specific examples I can take is rosuvastatin. Now, rosuvastatin volumes are doing quite well, but the pricing has significantly gone down compared to last year. Okay. So generally, if you look at, whether it is a statins portfolio or the immunosuppressants portfolio, the volumes continue to do well and our plants continue to manufacture full steam. It's the pricing which is impacting the revenue growth, or the degrowth is because of the pricing.
Just one clarity on this. How frequent is repricing of the contracts? Let's say you were supplying API to a partner and in the formulation level the pricing has gone down. So immediately the same quarter you have to reduce the pricing, or there is a lag which you get impacted?
Well, it's a combination of both. So at times the impact is immediately during the quarter, and in certain cases the price negotiations happen on an annualized basis.
Okay. But would you say which is more predominant between the two? Annual pricing?
Annual pricing, I would say, would be the most of our contracts would be on annual pricing. But even in those circumstances, if we have annual price agreement, if the market pricing changes drastically, then we have seen our customers come back even during the term of the price agreement to get a lower pricing or a higher discounts.
Okay, that's helpful. Just one more clarity. Based on the financial segmental financials that you give out on profitability and capital employed on small molecules, roughly we do still make very, very healthy returns of 20% plus on this segment. And when Kiran ma'am talked about pressure on outlook, in terms of outlook pressure continuing, is that very high return, is that you think can come down at a certain point of time to high single digit or low double digit versus 20% plus we make right now?
We do not expect that. As I had mentioned in response to one of the earlier questions, that the segment results, when you look at even on an average, let's say 65 to 70 crores a quarter, that takes you to let's say annualized profits of roughly 300 crores, and the total capital deployed for this business is roughly 1,300 crores. We're still looking at 20% plus, the ROCE. Now, the only caveat I should add is this is all dependent on finally the pricing. This year we do not expect any significant change, but if next year again, if there is a big impact on the pricing, then it could come down a bit.
Thank you very much. This is helpful.
Thank you. The next question is from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Hi, thanks for taking the question again. Initially you mentioned about the value unlocking in the biologics segment. If you can probably help us, given the fact that our debt equity is pretty okay and we'll be running into serious cash flows from next year onwards once commercialization starts for our developed market biosimilar portfolio, what will be the motivation for value unlocking in this business now?
As you know, we have basically also entered into a second partnership with Sandoz, and this partnership is also requires Biocon to develop certain assets from end to end. So we do expect a much larger spend on R&D as we progress and advance these assets. We will also be looking at various cash requirements for capex needs of our biosimilars in the future. All these, as you know, are gestational requirements because each of these require at least 2 to 4 years before you can actually commission such plants. So I think all in all we are assessing our capital requirements and based on that, we will basically raise capital in the capital market.
Okay, thanks. And
the only other thing I would also like to add is that one is the fundraise. I mean, the second is also, just the unlocking of the value.
Yeah.
You go to capital market for both the reasons.
Fair enough. And secondly, in your experience, what's been your, if you can probably share, what's been the typical cost which is there for developing a biosimilar product?
I think we have basically indicated that, depending on what the biosimilar is, it takes anywhere between, upwards of $100 and $150 million a piece.
And for us, that would be captured to an extent in the gross R&D spend that we indicate.
Yeah, if you look at our gross R&D spends this quarter, I think I'd already explained to you that at a gross level, we incurred a gross R&D spend of 94 crores, of which 53 crores is reported in the P&L. So we actually capitalized an amount of 41 crores.
Fair enough. And so lastly, on these trastuzumabs in the emerging markets, where probably we have the marketing right in a lot of these emerging markets, I mean, how do you see the subcutaneous version that Roche has impacting our positioning there?
When you look at biosimilars, I think it's about affordable access. It's about an emerging markets. I think the number of patients who can afford these very, very expensive treatments that really is about a different mode of delivery. I don't think these are what the Ministry of Health and the larger part of the population would be able to afford or access. So we believe that in the emerging markets, biosimilars certainly have a very, very major role to play. So we remain confident that biosimilars will be big opportunities in emerging markets.
Okay, thanks and best of luck, ma'am.
Thank you. The next question is from the line of Vikram Agarwal. He's an individual investor. Please go ahead.
Good morning and congratulations on your tie-up with Sandoz. Just a quick question on, as you have a partnership with Mylan and also now a new partnership with Sandoz. So it is key that you take in both the partners and grow the business successfully. So how would you manage the relationship between the two? Would there be any conflicts or something? And my second question is, I missed the Syngene con call yesterday, is that they mentioned in the results that a state-of-the-art biologics facility has been set up. Mm-hmm. So how large do you think that opportunity is and how fast can you ramp that up? Thank you.
So let me answer your questions as follows. First and foremost, Mylan is a very valuable partner, and so is Sandoz. As I explained in my, con call regarding the Sandoz partnership, our partnership with Mylan is, centered around first wave of biosimilars, and these are all near-term opportunities which we are confident will enable both partners to create a lot of value. Our partnership with Sandoz is for the next wave of biosimilars that come off patent post 2025. There is no conflict of interest. We believe that both these partners are extremely important and valuable to us for our future, growth and for our biosimilars, endeavors. So I believe that these are important partners, and we know how to manage both these partnerships in the way it should be done. In terms of the question that I think what was your next question you asked was about research services, and you asked about their biologics facility. As you know, they are actually dealing with a large number of pharma companies, and as you know, many of these big pharma companies' pipelines are now moving towards biologics. Amgen is one of their recent big, customers and partners, and I think they have a very strong biologics focus. They also have certain biologics, R&D contracts with other companies like Zoetis and others, and I think there is a need for biologics supply right from the clinical to the commercialization stage, and that is what I think Syngene is addressing in a big way.
Okay, so could you just share if how quickly could you ramp that facility up, and just in some thoughts on that?
Well, I think Syngene is beginning to get very confident that it can have a very strong business built on biologics, manufacturing and development, and I think they have entered into various contracts, which basically has given them a head start.
Okay, great. Thank you so much, and all the best for the future.
Thank you. The next question is from the line of Prakash from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity again. I did hear Saurabh talking about the R&D being around 450 to 500 crores. Current 9 months about 300 crores. So just a clarification here that do we maintain that kind of run rate? And since you also mentioned Sandoz is coming, the collaboration will pick up. So what kind of R&D run rate will look for 19 and 20, please?
So let me start the comments, and then Siddharth will add to it. As I have always maintained, I think R&D is a very integral part of our growth, and we need to invest in R&D, which unlike the generic pharma sector, requires huge investment dollars. Not only is it expensive to develop the kind of products we are developing, but it also is gestational in that it takes several years before you can actually complete the lab to market journey, and therefore the R&D spend should be an indicator of pipeline expansion, and I think it actually should be viewed positively rather than one of concern.
Sure thing.
And I think, Prakash, specifically answering your questions now, for the 9 month, the gross R&D spends were 283 crores. And for the fourth quarter, let's say, give or take, we'll be at 400 crores. So that would be the guidance for this year. For next year, we do expect the numbers to go up to 450 to 500 crores range.
Okay, thanks for that. And secondly, a positive development on asphalt. So what time frame, broad level requires for clearing the phase 1 and phase 3, and what is the very broad level time frame that we can see for approvals and commercialization for asphalt?
So, Prakash, I can't give you a specific thing, but you can see the time frame in terms of doing, if we have to do like phase 1 trials, phase 3 trials, depends also on, whether one needs to do type 1 and type 2 or just type 2 and things like that. So, suffice to say, right now we believe that, this is an opportunity that will pan out in the next, few years. And we are working closely with the regulators to see how we can accelerate the paths to approval. So it's too early days to comment on specific, timelines at this stage.
Okay. Is my understanding correct that typically it takes 2 to 3 years for clearing phase 1 and then typically 2 to 3 years for phase 3? Is that correct?
Phase 1 should take lesser time, but phase 3s, if required in 2 indications, then it will take longer. If it's just 1 indication, it would take shorter.
Perfect. And lastly, on bevacizumab, so would we still be in the first wave? We've started seeing some approvals. So just wanted to understand what could be the broad level timelines here.
We are progressed well on our phase 3 trials, and whilst there are other companies also out there, we are certainly amongst the set of companies that are ahead in this.
Okay. Thanks and all the best.
Thank you. We'll take the last question from the line of Shraddha D'Souza from Wealth Managers. Please go ahead.
Thank you for giving me an opportunity again. Our Malaysia plant is currently approved by how many authorities?
So in terms of the emerging market approvals for Malaysia, that we've already talked about approvals from, the Malaysian authority itself and Brazil, and I don't want to give a color in terms of how many countries have approved it, but suffice to say that Malaysia will be an important contributor to our emerging market story in the insulin space in FY19.
Okay. So,
just to add to, sorry, just to add to what Arun is saying, this is of course in addition to the European authorities approving the Malaysia plant.
Sure.
Correct. So there are more emerging markets which have approved our Malaysia plant.
Yes.
Okay. And are we satisfied with the way the approvals have been progressing for the Malaysia plant? I mean, from the time we have commercialized the plant?
We've always received approvals in the first cycle, so that does satisfy us. We got our EU GMP in Malaysia for both drug substance and drug product. We had the Malaysian authorities approve the product as well as the GMP. We had Anvisa out there, and a few other regulators. So I think it's been going well.
Okay. And could you provide an update on the cumulating ANDA filings?
I didn't get you. Cumulative?
ANDA filings?
No, it's been a small number right now because largely, as you know, that we've been operating through an outsourced model in terms of manufacturing until our own in-house capacities, get qualified. So our in-house facility has now been commissioned and in use. So for some of the early trials, and as that happens, we will ramp up our filings from our in-house capacity.
Okay. Now, in the light of what Kiran ma'am said in one of the previous questions, that we see a meaningful contribution from the complex generic starting from maybe 2020 or 2021. So in between this period from now till then, and in the light of the pricing pressure that we are seeing in the statins business and also the consolidation, what is our outlook on this business, keeping aside the ANDAs?
From the small molecules. Yeah. So if you look at our long-term growth that we had even given as guidance sometime back, the growth was in the either the high single digit or the low double digit kind of a range.
Right.
And that is what we expect to see until some of these new product approvals and ANDA launches happen.
Okay, that would be helpful. My last question is, what was the reason for the sequential drop in the branded formulations business this quarter?
I think we mentioned in the call last quarter that there was a one-time rebounds because of the GST. Remember, the Q1 was very low. So this is now more normalized, I would say.
This is the more sustainable run rate that we should see.
Yeah.
Okay. Thank you so much. That's it from me.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Saurav Paliwal for closing comments.
Thank you, Margaret. Thank you for joining us on this call, ladies and gentlemen. If you have any further questions or need any clarifications, please do reach out to me. Have a good day.